As promised, it is now time for top picks from Christine Poole. She's been our guest on Market Call. She's taken your questions on North American large caps. Top pick number one, Aritzia, the women's fashion retail, has become a real champion here in Canada and in the U.S. as well.
That's right, Paul. It's a little different for me because it is a smaller cap name. The market cap on this name is about $4 billion. So we bought this company for our clients with more of a growth focus in their objective. But you're right, the growth of this company, they have about just over 100 stores. About a third of those stores are in the U.S. and the balance in Canada. We think that the unit growth potential in the U.S. is very strong. So they have about 40 stores in the U.S. The company's always been targeting about 100 stores since they went public. So still a lot of room to grow. They're opening about 8 to 10 stores per year. And, they're vertically integrated. They've been right on with the fashion. They have exclusive in-store brands under various names. Appeals to a very wide demographic. I asked the CFO, he said they think their age profile, their audience is 15 to 55. And they coined their clothing as everyday luxury. So the stock is pulled back. It's trading at about just under 20 times forward earnings. Those earnings, the margins are being depressed because they're using expedited freight to create inventory and building it up. And they have not seen a change in consumer behavior, spending patterns, even with higher interest rates and inflation. But meanwhile, I think the market has been concerned that potentially that may happen, and the valuation has pulled back. So I think, we're buying this for new client money at these levels.
Okay, number two, Brookfield Asset Management, ticker symbol BAM, BAM.ca.
That's correct. Obviously, very large global alternative asset manager, has various verticals that have publicly traded subsidiaries, whether it's renewables, infrastructure. They took property private last year. They're in private equity. Stock has pulled back along with a lot of alternative asset managers in a rising rate of interest environment, volatility in the private equity market. But this company has been successfully raising new money in various funds they've launched. One of the most high profile one is their Global Transition Fund. They just closed it at $15 billion. That's headed up by Mark Carney. And I think for this company, they actually like volatility and dislocation. They like to buy hard assets to provide long-term cash flow streams and give you a reasonable rate of return. But, when they buy assets, they like it if the company's selling non-core assets, if it's distressed assets, or a company wants to be taken private. So, when there is volatility and dislocation in pricing, that's when they take advantage of that and deploy capital. And as well, finally, they bought a 62% interest in Oaktree Capital back in 2019. And they specialize in credit, headed up by Howard Marks. And I think that kind of opened up their whole platform to equity and credit. And there was a lot of revenue synergies as well, and doubled their client base.
Okay, and number three, Raytheon Technologies, ticker symbol RTX in New York.
So we owned the predecessor company, United Technologies. Back in April of 2020, United spun off Otis and Carrier, and then they merged with Raytheon, which is a defense company. And so now they renamed themselves Raytheon Technologies. I talked earlier about suppliers into the aerospace market. So Collins and Pratt & Whitney, which many of your viewers are maybe aware of, is an engine manufacturer. They supply into the commercial aerospace market. And so that is a way to play the recovery in air travel because, when planes don't travel or fly, there's no aftermarket servicing. So those businesses got decimated in the health crisis. Now we're seeing the ramp up in domestic travel, in particular in the US, it's back to pre-pandemic levels. We're seeing a pickup in international travel. So, aftermarket is really picking up. And then as well on the defense side, what Raytheon specializes is missile defense systems, cybersecurity, areas that I think are gaining more traction in light of the Ukraine war. The company have been guiding to 3% earnings compound annualized growth in the defense side. I think with its renewed focus in geopolitical security, defense actually is looking more attractive as well. So it's kind of a play on both the defense side as well as commercial aerospace side, trading at a reasonable multiple and giving you a yield of about 2.4%.